In August 2023, South Africa will host the leaders of Brazil, Russia, India, China, and South Africa, a group of nations known by the acronym BRICS. Among the items on the agenda is the creation of a new joint BRICS currency. It has generated mixed reactions. Many believe that a changing geopolitical landscape is challenging the traditional dominance of the West. And while the BRICS countries have been seeking to reduce their reliance on the dollar for over a decade, Western sanctions on Russia after its invasion of Ukraine have accelerated the process. On the other side, many believe that toppling the dollar won't happen fast. After all, a currency's strength comes from its demand. With the US dollar still widely used, many countries won't instantly shift as it aims to preserve the value of the asset it holds. More than 88% of international transactions are conducted in US dollars, and the dollar accounts for 58% of global foreign exchange reserves. Here's the truth. Both parties are right. De-dollarization won't happen overnight. The US dollar will most likely remain dominant for years to come, but more countries have made active moves away from the dollar. Iraq has just banned US dollar transactions. The Saudis and Emiratis plan to sell oil without it. So while we may be secure with our dollar for at least one more decade, the next one is a different story. Hi, I'm Ivory Hecker for Noble Gold Investments. The US dollar is banned. The Iraqi government announced a ban on doing personal and business deals in US dollars. Ordinary Iraqis usually make big ticket purchases using dollars. Because of the ongoing devaluation of their own dinar, they'd need several large rubbish bags filled with paper dinar notes to buy a car or a house. For decades, the US dollar has been the best currency to have in the Middle East. If you don't have enough dirhams, dinars, rials, or pounds on hand. In Iraq, US authorities have been making it harder to get dollars into the country. They were apparently worried that too much American cash was being smuggled to the neighboring Iranian government, which is under sanctions, but is tacitly supported by many Iraqi politicians. This shortage of dollars has led to volatility in the value of the Iraqi dinar, which is pegged to the US currency. Saudi Arabia is the gold ticket. When the US dollar decoupled with gold, nations agreed to peg their own currency against the US dollar. Many are puzzled, given that the US doesn't have enough gold to back their currency. Why would other nations want to back their currency against the dollar? Saudi Arabia was the ticket. During this time, there was also increased interest in the Middle East due to its rich oil reserves. Because of Anglo-American dominance in the oil economy in 1961, the Organization of Petroleum Exporting Countries, OPEC, was formed, initially by Saudi Arabia, Iraq, Kuwait, Iran, and Venezuela, to protect the sovereignty of each country's natural resources. It has since included Algeria, Angola, the Republic of Congo, Equatorial Guinea, Gabon, Libya, Nigeria, and the United Arab Emirates. A series of political movements and conflicts contributed to the 1973 oil crisis. Due to the USA's allegiance to Israel in the Yom Kippur War, Saudi Arabia announced an oil embargo on the US in the same year, which led to the US swiftly pressuring Israel into making a deal to end the war and having to rethink its strategy about how to control the oil production in the region. Following this, in 1975, Saudi Arabia and the USI signed approximately $2 billion worth of military contracts, leading many to understand that the US and Saudi Arabia made a deal trading the protection of the oil fields with US military power to ensure that oil sales were made exclusively in dollars, solving the fear that the US dollar would become irrelevant. Saudi Arabia also argued strongly to OPEC to keep oil in dollars. Before the end of 1975, all the rest of the nations of OPEC had agreed to price their oil in dollars and reinvest their surplus petrodollars in U.S. government debt securities in exchange for similar levels of military and economic protection. There is stability and security in adhering to a common currency. For oil proceeds to be most efficient, it makes sense to trade in a stable common currency. A shared currency for a commodity is natural, but the U.S. ensured that the dollar was picked for oil. On March 29th, Saudi Arabia announced that they have agreed to become a dialogue partner with the Shanghai Cooperation Organization, the world's largest regional political and defense organization in terms of geographic scope and population. Furthermore, in January at the World Economic Forum in Davos, the finance minister of Saudi Arabia, Mohammed Al-Jadaan, told reporters that with Saudi Arabia, there are no issues discussing how we settle our trade arrangements, whether it is in the US dollar, the euro, or the Saudi riyal. Considering the historical bond that the US and Saudi Arabia have had, these claims might seem small on the surface, but speak of a huge shift that could happen in the future. Saudi Arabia is not dropping the petrodollar yet, but their activity suggests that they might be considering other options. Ambitious and complicated. Then there's the political complications. There are political complexities between the nations participating. Everyone will have to agree on an exchange rate mechanism, have efficient payment systems, and a well-regulated, stable, and liquid financial market. More importantly, it's questionable whether any of the participating countries will agree to give up their own currency. This is why the talks of gold-backed currency are being floated, something that is more integrated and allows for a cross-border transaction. In 2010, the BRICS Interbank Cooperation Mechanism was launched to facilitate cross-border payments between BRICS banks to local currencies. BRICS nations have been developing BRICS Pay, a payment system for transactions among the BRICS, without having to convert local currency into dollars. It's been a struggle. This is not the first time someone has tried. In 2014, when the BRICS countries launched the new development bank, its founding agreement outlined that its operations may provide financing in the local currency of the country in which the operation is taking place. Yet in 2023, the bank remains heavily dependent on the dollar for its survival. Russia and India have sought to develop a mechanism for trading in local currencies, which would enable Indian importers to pay for Russia's cheap oil and coal in rupees. However, talks were suspended after Moscow cooled on the idea of rupee accumulation. But multiple failures doesn't mean they will never succeed. Remember that the BRICS managed to develop joint policies and survive major crises, such as the 2020 to 2021 China-India border clashes and the war in Ukraine. BRICS has deepened its cooperation, invested in new financial institutions, and has been continuously broadening the range of policy issues it addresses. We don't want it, but we must prepare for it. The point of all this is to make us realize that even if we don't want something to happen, and even if we don't think it will happen, we should still prepare for it. After all, investing is not about today or tomorrow or the next 5 years or 10. It's a long-term thing. Make sure you are ready for what is going to happen in 15, 20, or even 50 years. So invest and diversify. Invest in the market, bonds, real estate, cryptocurrencies, and precious metals. Invest as much as your financial tolerance will allow. Don't rely purely on the US dollar. Invest in assets that are global, assets that will remain in demand even in other countries such as gold, silver, and other precious metals.